In other business news now, economic activity continues to improve in South Africa, albeit slightly. That says a further increase has been recorded in the latest BankservAfrica Economic Transaction Index, reaching a level of 133.4 points. This is by 1.3% higher compared to a year ago and a 0.8% rise in March, following a disappointing reading in the previous month. Independent economist Elize Kruger discusses this with us. Good evening to you, Elize. At least some good news, lower load shedding and the anticipated ease in inflation. Attributing to this, do talk us through the rest of the detailed contributing factors.
Good afternoon, Tumisang. Yes, indeed, the BankservAfrica Economic Transactions Index did increase in March, 0.8% up on February. So that is good news, and I think, the fact that we had a suspension of load shedding towards the end of March could have contributed to this recovery. Although, as you mentioned, Feb was quite a weak month, so we've basically just wiped out Feb's decline, and we are back at the index level that were recorded for January and in December. So overall, it's still a bit of a sideways story, but on the month, we have seen that recovery.
A sideways story, but it says something about the current state of the South African consumer. What picture does this particular reading then paint of every other South African that is still under pressure?
Yes, indeed. I think, unfortunately, we are struggling to break out of this current band in economic activity. We see that in the Betty moving sideways over time, some months up, some months down, but we're not breaking out of this current fairly narrow range. Similarly, we see that in economic activity on other indicators as well. So it's really a sideways movement. We are not seeing growth, or gaining momentum as we would like to see that. And I think, if you think about the economic scenario in 2023, in terms of interest rates elevated, we still have our inflation rate at a high level. Our latest available data point was 5.6, when we are still close to the 6% upper level of the band of the Reserve Bank. So it's still sticky inflation that's around, and that's also impacting negatively on economic activity.
Now, what's the near-term outlook at a realistic level, Elize, factoring in the current logistical challenges, uncertainty, of course, on whether load shedding may still intensify, and the slow pace of monetary policy easing in this country? What do we say about all those matters?
I think we are in for a couple more months of this current mother-along scenario, Tumisang. So we're not seeing at this point in time that inflation will come down notably. Only towards September should we start to see inflation moving closer to 5 and into the range of 4.5 to 5. So that remains an issue, a thorny issue for the Reserve Bank, who would like to see inflation more towards the midpoint of our target band in the order of like 4.5%. Therefore, we cannot expect that interest rates will be cut, in the near term. And I've just listened to your news bulletin about the US CPI today also, again, disappointing and higher than expected. So that also signal that globally we might see, only a later move in terms of cuts in interest rates, and that will impact on our scenario as well, especially given that, we are banking on a somewhat weaker dollar once the international interest rates start to be cut. And that weaker dollar would then help the rand exchange rate. Yeah. And, that will propel, hopefully, our CPI numbers closer to the midpoint. But if all of this is just delayed a bit further and a bit longer during this year, it remains a very difficult and a punitive scenario in South Africa for households.
Now, how does this translate into sentiment? I ask this, Elize, because I want to find out if there is a case to be made around economic transactions and sentiment itself. We're heading towards an election year. The global landscape, as you've referenced, the U.S. inflation coming in hotter than expected. Our own inflation rate in South Africa not easing at a level that is required for interest rates to be cut. Now, we put all of that together in terms of the correlation, the relationship between spending, economic transactions, as well as sentiment about the domestic economic activity.
Indeed, I think all of these, factors are contributing to confidence levels remaining quite muted, both for households and for businesses in South Africa. The environment remains difficult, and it's not changing, significantly or meaningfully enough to really change the narrative in terms of spending and in terms of even debt and the cost of debt. So, yes, I think, we are in for some more months of this where it's difficult to really expect confidence levels to pick up. And as you know, if you're just feeling sort of uncomfortable with the environment, the last thing you will do is to spend unnecessary or maybe take on more debt if you don't have to. So that is also keeping back economic activity.
Thank you, as always, for your input. Elize Kruger is an independent economist. They're talking to us about the latest economic transaction index from BankservAfrica.